Financial year has started on a fairly tepid note. Industrial output in April has contracted by 0.8% in April. This after showing some signs of a recovery in February and March. Our poll had suggested an increase of about 0.8%. Ritu Singh is here to break down the numbers. Ritu, what led to the sharp contraction in April? Typically April is a weak month and we already know that, but there were some areas which were quite a surprise and could be a concern going ahead.
Well, there has been some persisting contraction that we've seen over the last few months, barring February and March. In the month of March, our industrial output grew by about 0.3%. But for this month, it was a real shocker. It's seen a degrowth of 0.8% versus our expectation of a growth of 0.8%. The main reason, of course, is the drag in manufacturing, as has been the case for the past several months. Manufacturing, remember, constitutes 80% of the basket in the IIP numbers. That was down. That contracted by about 3.1%, versus the core 8 core sector data that came out in April, where it was at a 17-month high, recording a growth of 8.5%. This, of course, is a real shocker. Electricity grew by about 14.6%. That again has only a 10% weightage. So despite the fact that it was at a one-year high, barely reflected in the overall IIP numbers. Mining also grew by a mere 1.4% against a contraction in the previous month of March. Capital goods, which really reflects the private capex, that was also a sharp fall, also dragging down the IIP. That contracted by about 25% in the month of April. Consumer goods was also down 1.2%. Within that, if you look at the non-durable and durable goods, non-durable is at the lowest in the last 1 year at minus 9.7%, and durables grew by 11.8%. These are some of the key numbers. So as you can see, mining, poor growth, but manufacturing is the real reason why IIP was very poor numbers that we saw for April. Going forward, it'll depend on how the monsoons play out and if that would be sufficient to lift the rural demand for better IIP numbers, at least in the second half of this year.